certainly been an interesting 3 years. It's always a long time in the markets, but these 3 years in particular, I think quite a lot has happened. We've had the resurgence of inflation and, of course, the subsequent shift in monetary policy globally that stemmed from that. We've had reopening after COVID and then the hopes of economic expansion. And then, of course, as the cycle matured, the fears of recession and potential timing of that. And then, of course, somewhat more recently, we've had the emergence of artificial intelligence as a theme. And altogether, that added up to a lot of rotations in the markets, should we say, particularly in the equity market. We saw style rotations, value coming to the fore in 2022. And then, of course, in 2023, we had the artificial intelligence-driven rally in a very thin section of the market in the Magnificent Seven. So it's certainly been an interesting environment for asset managers to navigate, I would say. Across our product range, we try to be consistent. We try to have a consistent philosophy and process. So we're not trying to react and reinvent ourselves in response to short-term gyrations in the market. If we look at the equity side, we are value investors. And that means that certainly in 2022, when there was the value rally, that was a good tailwind for us. But maybe if we look a little bit further back, there was, of course, a long period of sort of an extraordinary long period of ultra low interest rates, which led to some distortions in the equity markets. And subsequently, as we've had a return to more normalized cycle of monetary policy, that's maybe reminded the market that there is a role for value investing to play. And of course, that's been positive. But of course, for us, it's important that we have that discipline in the long years preceding that to stick to our philosophy and process. The AI theme and the thin markets of 2023, that's been a more challenging environment, should we say, if you manage diversified value equity portfolios. But for us, again, it's a question of sticking to our borne-out process, knowing that that is what generates decent results over the long term on a cross-cycle basis. I suppose I wouldn't be a value investor if I didn't talk about patience and persistence and discipline. But I really think whether we look at a long-standing team, applying a disciplined philosophy and value, applying a time-tested process for the selection of individual stocks, those are crucial ingredients to it. I think something else that we think is very important is sustainable investing. So if we look at sustainable offerings in the market, often there's a skew towards growth and quality. We think there's a lot of value to be found in the intersection between sustainable investing and value investing, which is perhaps not the first thing people think of, but we think is extremely exciting. We're delighted to have won a Lipper Award. We think it's focused on long-term performance, which is what we're about. I think it's a vindication of our people, our philosophy and our process, and we look forward to continuing to generate those returns in the long run. So thank you.